morning, friends. It's Friday, November 4th. This is Marv Eisen from Timeless Dollar Trading Academy, and I'm beginning the day looking at the economic calendar to see if there are going to be any announcements that are going to be tending to move the market. And today there is an announcement, but it is going to be pre-market at 8:30, and it's right down here. The non-farm payrolls report, which will tell us how many jobs have been added to the economy. And in this case, we are looking for a report that is sort of negative, because the better this report, the worse it's going to have as a reaction on the market. At least initially, early part of the morning, we will see. Looking over the morning news, CNBC shows me that all flags are in the green, futures are up, as is oil, which is to be expected, treasuries, 10-year treasury notes, of course. Interest rates are up, and the 10-year note is reflecting the interest rate, brought to us courtesy of the FOMC. Speaking of which, this was the FOMC announcement day on Wednesday, just 2 days ago, on the 2nd, Wednesday the 2nd, November 2nd, and here is my trading zone for the day. And of course, on FOMC days, we can never really count on the market doing what normal averages would tell us it should do, which is what the trading zone measures. So at any rate, I always put the trading zone on my chart for the day because it tells me where the market is likely to trade. And I put the previous day's close on my chart as well. So on FOMC day, trading is a little different than it is on many other days. And let me give you an explanation starting from beginning in the morning. Typically on FOMC day, the announcement always comes out at 2 p.m. Eastern time. But prior to that, the market trades rather lazily. You see, there are candles that are just up and down, short swings, not really going anywhere. You know, if you were taking someone to a dance or you were looking at people dancing and some people were dancing lazily and some people were dancing with energy, well, the market dances lazily on the mornings of FOMC announcements. And this is sort of what happens. It goes up and down. Trading is really not worth anything prior to the FOMC announcement because the market is just awaiting the results of the announcement. And look what happens at this time. Now, frankly, I tell my students, and I caution them, that on FOMC days, it's better to sit it out. Take your risk off. Do something else for the day. It's better not to trade. Now, I say that because I want you to understand what the FOMC day does. Well, actually, you can see it on this chart, and let me clarify it for you. You see these horizontal lines? Okay, there are 10 points between each horizontal line, 10 points. So 10 points, one contract in the S&P E-mini, 10 points is $500. So it's $500, okay? At the time of the announcements, and here we are, this first big candle here at the time of the announcement, let's see how it moves. First, it went down about 15 points, and then it went up 10, 20, 30, 40, 50, 60 points. Now, these are 3-minute candles, my friends, 3-minute candles. And then it sort of came to a stop at 3,900, bounced around a little, but within each 3-minute candle, we see about a 15 to 20-minute swing. And then when it made up its mind on the overall effects of the announcement, market collapsed, hung around at my calculated support at 38.58, continued down in a sharp swing. But in these sharp swings, look at the shadows, long shadows. Now, suppose you awaited this, the initial announcement. You didn't trade up here. You waited this out. You saw this happen over here, and you said, the market is going to go down. Okay, so you take a trade. Let's say you take a trade around here, and all of a sudden the market rewards you with a 30-point move down. Okay, see here? From here to here, 30 points. $1,500 on one E-mini contract, okay? But let's say you get in over here, somewhere over here at 38.25, goes down a bit, not too bad, still 15 points. and then starts going up. And all of a sudden you're $1,500 underwater and you say, oh my God, it's going to go back up to where it was. You don't know. But you see these gut-wrenching swings. Yes, FOMC days, you can make a lot of money, but if you guess wrong, you're going to lose a lot of money. And you know what? Nobody wants to lose money, but if you do lose money, you don't want it to be a big loss. You want it to be a little loss. Let me tell you something else about FOMC days and trading in general. In trading, you want to be able to manage and reduce risk to as little level as possible. And that's the key to trading, reducing risk. Consistent profits, small consistent profits, couple of points here, couple of points there, couple of points here, maybe lose a point, 2, 3 points. But you don't want to go for swing for the fences, because when you do, you have to be prepared to absorb a possible major loss that will take you a long time to recover. So that's my advice on FOMC days. Wait till the market settles out. Don't even bother trading the day. The morning preceding the FOMC announcement, trading is always lackluster, just a little up and down. It's not even worth your time looking at the price movement. During the FOMC announcement, almost always you're going to see this kind of volatility, and why risk it? The name of the game is consistency. So that's my advice to you. Cut your risk, improve your trading odds, improve your profit. This is Marv Eisen for Timeless Dollar Trading Academy. Have a great day. Trade safely. Use lots of patience. Oh, and remember to turn the clocks back on Sunday morning, 2 a.m.